Good evening, everyone, and welcome to another video by The Bottom Line. In this video, I want to speak about a stock that has given me close to 200% returns in a span of 9 months. Now, this is not a video about I told you so, or this was bound to happen, or how good my analysis is. But the focus of the video is how do you get to a level where with very simple techniques you can select a stock and ride the trend, and without a lot of effort, indicator, signaling services, and what other things people are selling out there. Your analysis can be as simple as ABC, and you can do a lot of things with that. So if we look at the stock that I'm talking about is basically Angel One. It's a broking firm. In a broking firm's case, I don't look at the debt to equity because the broking firms generally give a lot of leverage to other clients, so their debt to equity is always bound to be higher. You will see Motilal Oswal, Share India Limited, and many other brokers having very high debt to equity ratios. But there are other factors which are very common to what we have seen before, right? And during the time of stock selection, which I think was around in April. If we first look at the P ratio during the month of April, the P ratio was at 11, and if you see the industry average was at 20. So was I buying something that was very expensive at the time of buying? Absolutely not. It was at half of what the industry was being valued at. So that was my first point to come to a decision of whether to buy it or not. Again, that's not the sole aspect where I made the decision, but if you look at all the other fundamentals, look at the quarterly sales, everywhere we have operating profit margins as high as 40. On a yearly basis also we have operating margins that are well above 40 for the past 3 years, well around 25 and 30 for the past 6 odd years. Now, if that is not impressive, I don't know what else could be really impressive. I remember I had made a note on 22nd of April. Probably that is my buy date. I don't know. I'll reveal that maybe when I show you the charts. But basically 22nd of April is when I made the notes and said this is fairly valued. The cash holdings are enough to cover the debt, and the free cash flows are excellent, right? So if I go down to the balance sheets, borrowings will always be high. So ignore borrowings in case of a broker, a bank, NBFC, because they are highly leveraged industries. If we look at cash equivalents during the time, was close to 5491, which is well in control of equivalents. If we look at the operating activity, the only concerning year for me was March 2021. Again, I take that as an exception year because it was a year when we were all hit with COVID and all the industries were grappling with what they had to do. In the previous years, there was a problem, but the problems was due to receivables. So it was not that they were not making business. They did have business, and they had a lot of ongoing business even in the next few years. But after that, we've seen an excellent cash flow of 500 crores. We've seen an excellent cash flow of about 700 crores here. Even in this March 2020 year, we've seen a cash flow of close to 600 crores. And that's not a small number to really begin with. It did struggle in 2015, and this is not when I was looking at this stock. If you would have gone and seen the prices during this period, the stock prices would have been in a problem. ROC for the past 4 odd years, excellent. When in December 2022, when I began, you see how steadily from 4%, the FIs have increased their holdings, the DIs have kept their holdings steady. So all these factors led to a decision. Even if we do a peer comparison, the decision was that this is the one with the lowest debt to equity. There was Motilal Oswal, but it was with a little high. It was a little high in terms of the debt to equity for my liking, even if it is an industry which is making good amount of progress. But with this debt to equity, the ROE was excellent, and during the time, the PE was very undervalued to what it was. Now look at the PEs of other companies. You look at Motilal Oswal, is still attractive. IFL is still attractive. 5paisa is overvalued. Geojit is undervalued. So these are the few pointers and basis which this stock was basically selected. If I go to the actual chart, this was 26th of April when I bought. I think I made the notes on that just 4 days before that, which was clearly stating that I was making up my mind to buy the stock, and these were my reasons. And somewhere in April, I think at an average price of 1230 is where I bought, which is on this candle, or rather on this candle in April, and that's where we had began our journey to accumulate the stock. And then 1 month in between, 1 month of consolidation in between, and we have a clear case of run up from here, and now we are sitting with 1200, and the stock is well above 3600 now, which is basically 200% of the profit. I have already sold a part position in this, because 200% in 9 months is crazy returns, right? And I don't want to hold on to it too long, especially when the stock P has now become 30 and it is well above the industry average. That's when I generally see the stocks will start making a whipsaw around this price. They'll generally go only slightly up, but they will continue to make some whipsaws in between. That's what my concern was, and with that view I part booked and kept a very small quantity just to experiment what happens with the stock going ahead. So that's all I wanted to cover in this one. Again, just pointing out very few things. 1, keep your analysis simple. 2, look for valuations, and 3, look for the right entry points by viewing the broader market, which is Nifty in my opinion, and see where you want to enter. So in a span of 9 months, a stock can give you 200% returns. Now 200% is not a joke. 200% will not come always, so I cannot come here and make a blank statement that every stock that I invest in makes 200%. That would be a really vague statement to make. But if 1 or 2 such stocks can be hit with even a small investment, they can give a good amount of capital uptake, a good amount of wealth creation for someone who's serious about it. Right. Until I see you next time, I wish you good luck and good investing. Bye bye.